Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Well, we spoke about the market technicals. It's time to discuss market fundamentals with Agrawal joining in from SBI Securities. Good morning. Thank you so much for joining us. Well, I just wanted to understand your view on markets right now because there's nothing that seems to deter Indian markets for sure. We are approaching union budget as well. Do you think ahead of that we could see some more moves, and after budget there could be some profit booking?
Yeah, good morning, Sonal. I think if you look at the valuation, Nifty is trading close to 21 times FY25 earning per share EPS. Although trading at a premium to the MSCI emerging market, but liquidity is something which is keeping market buoyant. So we have seen a very strong liquidity from domestic institution and retail investor participating directly or indirectly. Although FII flows continue to remain volatile, yes, you have rightly pointed out the upcoming union budget is leading to a lot of positivity in the market, and post that we may see some either time-wise or price-wise correction in the market. Having said that, what I feel is that ongoing June quarter numbers will have an stock-specific reaction. So we have already seen two large IT companies, TCS and SCL, reporting slightly better than expected numbers, and we have seen a positive reaction in IT sector. In terms of earning, what I feel is that quarter one, we will see a very good set of numbers from auto and as well as BFSI sector. And if somebody is a long-term investor, I think bottoms-up stories still exist. So we need to identify companies which are likely to deliver healthy earning growth over the period of next 2 to 3 years. So yes, it's a bottoms-up stories are still there in many sectors such as auto and telecom, wealth manager, mining companies, ethanol, so on and so forth.
Particularly about IT, since you spoke about the top two IT companies reporting their numbers, have you upgraded any of the stocks or changed your EPS estimates post the numbers? Is there a turn in the demand sentiment? Do you feel differently about IT than what you did 2 months back?
Yeah, so Reema, yes, IT, what I believe is that in the terms of demand environment, it's work in progress. However, after looking at a commentary from TCS and SCL, it seems that the concern on spending cut is at least easing out, and quarter two and quarter three are likely to be a better quarter as compared to quarter one for tier one IT companies. In terms of earning growth, I feel, we all know that mid-tier companies like KPIT, Cyient, specifically focusing on ER&D space, are likely to be a relative outperformer in terms of earning growth. And hence, in terms of valuation, although trading at an expensive valuation, since earning growth are relatively better as compared to tier one IT companies, we may see a sustenance of expensive valuation in mid-tier IT companies. So yes, at current juncture, mid-size IT companies look much better as compared to large cap IT companies. Large cap IT companies, if somebody really want to invest, maybe an SIP route is the right way, where one can gradually deploy the capital in names like TCS, Infosys over the period of next 3 to 4 months.
By the way, mid-cap IT is indeed doing very well. Look at Oracle Financial Services, 5.5% on that. It's crossed the 11,000 rupee mark. A latent view is surging 4.5%, much smaller. Intellect Design Arena is up. These are stocks where you are seeing some buying, incremental buying. And then the others like Zensar continues to remain up 6%, about a 3% gain on Emphasis Science. So many of these mid-cap IT companies are higher.
And that's what's been happening since the time we got numbers from TCS, right?
Last 2 days.
Sunny, I wanted your take on EMS players. You like the likes of Syrma, SGS and Amber Enterprises. These stocks have seen a one-way move, expensive valuations, margins in single digits. What's the next trigger for growth here? Do you think at these valuations as well, someone can go ahead and look at these names?
Well, yeah, I think, yes, I agree that valuations are expensive, but one has to keep in mind that the way government is supporting EMS sector through PLI scheme and the kind of execution which we are going to see across the board, whether it is from a mobile phone perspective, consumer durable perspective, I think the earning growth is likely to be pretty good over the period of next 3 to 5 years. I believe that expensive valuation, premium valuation will sustain for all the AMS player. And one can look at companies like Amber Enterprises, where we are seeing a diversification of the business from only AC to non-AC sector, fast-growing sector. At the same time, we are seeing a backward integration in the form of component manufacturing. So I think few companies like Sirma, where the earnings has been muted since last 2 to 3 quarters. There, I feel FY25 is likely to be good on a low base of FY24. Amber, again, due to diversification. So I think there are a few names where definitely opportunity exists from a medium to long-term perspective.
Okay. What have you made of the up move that we're seeing in tire companies with the price hikes?
I think for tire companies, the price hike at least have addressed the concern that with the rubber prices at multi-year high, at least we will see a better margin for Q2. But what I feel is that Q1, which is the June quarter numbers, will remain muted because of the higher rubber price and margins coming under pressure. So I think I would like to wait for a few more months before taking a call on tire companies at the current juncture.
You like Praj Industries as well as the ethanol play. You think there's still a lot of catch-up that is needed there? There's a lot of move, a lot of chatter around ethanol, but then we saw the diversion of production to sugar versus ethanol. Do you think regulatory risks are something which could continue to plague the sector?
I think yes. So there was a regulatory risk a few months back, but I believe once the election is over, outcome is there. We believe that the government is still committed to ensure that 20% blending ratio from the current 15%, and that will at least keep order inflow ringing for companies like Praj Industries. Yes, I agree. The stock has run up significantly during last 2 years. So maybe buy on dip is the right strategy in a names like Praj Industries to ride on ethanol story.
Okay. Any other, many of the stocks that we've spoken about in the past also, Sunny. So any new ideas that you've had which, SBI Securities has come up with in the last 1 month?
So Reema, we are bullish on cables and wire iron segment, and Finolex Industries is the one stock where we are pretty bullish on, more of a B2C business, trading at a relatively cheaper valuation as compared to RR Kabel and Polycab. At the same time, we have seen that companies are going to pursue capex of close to 500 crore over the period of next 2 years. That will add a lot of capacity to their both telecom cable as well as normal electrical cable. And being a B2C business, I feel the lower valuations are not warranted for Finolex Industries. And one can look at maybe 15 to 20% return from Finolex over the period of next 6 to 12 months in Finolex.
Okay, all right. Thank you, Sunny, for joining us today. So those are market fundamentals. The markets, by the way, continue to do well. 80 points are on the Nifty, and the mid-caps, they are powering through. Time for a short break now. When we return, we'll be joined by Karan Taurani of Elara Capital. We'll discuss Zomato's platform fee hike in Bengaluru and Delhi, and we'll get his take as well. Stay tuned.